The Reserve Bank of India has cut rates for the fifth time this year in a bid to revive economic growth in Asia's third largest economy. The central bank lowered the benchmark interest rate from 5.4 to 5.15%. That's its lowest in nearly a decade. It's now been slashed by 135 basis points over the course of this year. The move was expected by economists, but the RBI also trimmed its full-year GDP growth forecast for a fourth time, down from 6.9 to 6.1%. Now, India has been battling a faltering economy amid global trade frictions. In the April to June quarter, its growth plunged to its lowest levels since 2013. And just last month, the government announced plans to put $20 billion of corporate tax cut to spur growth in the economy. The news did little to cheer investors, with both the Nifty, the Sensex, both of those indices down in trade today by over 1%. Rebecca Bundan has more for us from Mumbai.
The Reserve Bank of India, or RBI's interest rate cut by 25 basis points in the key repo rate to 5.15% was widely expected. But markets and some businesses were actually slightly disappointed because there had been some hopes that there might be an even bigger reduction in interest rates. That's because companies and investors want to see measures that can help boost consumer spending, with slower consumer demand being a drag on India's economy. Lower interest rates generally help to reduce borrowing costs. This can help kickstart the economy, and it's much needed at the moment because India's GDP growth slowed to a 6-year low of 5% in the April to June quarter. There have been various steps taken by Narendra Modi's government to try to improve the situation. Most notably, the government announced a surprise reduction in corporate tax rates last month to 22% from 30%, but analysts say more steps might be needed. The RBI also says it has cut its GDP growth forecast for the current financial year to 6.1% from a previous projection of 6.9%. Inflation generally seems to be in check, and the RBI has retained a policy stance that leaves the door open for further interest rate cuts, and they may be needed if the economy doesn't pick up. Rebecca Bundan, CNA, New Delhi.